Welcome to the Lend Academy podcast, episode number 50. This is your host, Peter Renton, founder of Lend Academy. Today on the show, we have someone who's a little bit different. James Gutierrez is the CEO and co-founder of Insikt, and that is Insikt, but it's a Swedish word which he gets to at the end of the show, why his company is named that way. But anyway, he has created a company that is pushing the envelope in many different areas. He coined the term lending as a service, and he's really sort of put a stake in the ground saying this is really going to be the future of marketplace lending, and he is going out and helping to create that future. But he's not just lending as a service. He's got a whole bunch of offerings for investors. He does some unique things with Lending Club and Prosper Loans, which we're going to get into. And he also has a whole bunch of research and analytics tools for investors. So we talk about all of that and more. I think it's a fascinating company, and I hope you enjoy the show. Welcome to the podcast, James.
Thank you, Peter. I'm very happy to participate. Okay,
so let's get started. I mean, you've got a bit of a different background to many of the people that I speak with. I mean, this is you've been around this industry longer than most. You've got a successful company under your belt that I think is either about to go IPO or has. I can't remember where it's at. But anyway, why don't you share a bit of the background about yourself, what you have done before Insikt?
Sure. Thanks, Peter. Well, I grew up in Southern California, Latino family neighborhood, and my parents always stressed the importance of giving back to the community. When I was younger, I had witnessed, a lot of family members and people in the community who were very hardworking, but didn't really get a fair shake by, the kind of system we have in the U.S. The vision of that we still have the American dream and is available to all, I think has been a bit challenged. And particularly when you see people working 3-4 jobs, care about the American dream providing for their family. And I felt like there's some level of social injustice there unless that gets fixed. So I went on and I went to undergrad at Yale, went to Stanford for business school. When I was at Stanford, I started thinking about this a lot, and I felt, hey, I want to start a company that solves this problem and gives opportunity more broadly and access to opportunity to people in America. I then read a book by Muhammad Yunus and how he had, built this innovative micro-lending model in Bangladesh, and that had spread to other countries. And I was inspired by that and thought, I'd love to figure out, if we could bring that to the U.S. and also, how to solve this unbanked problem. Because when I thought about access to opportunity, it matched up directly to access to capital. If people in our communities, in this case, the Hispanic community, has more access to capital, we have a better opportunity to build wealth and move up the ladder and get the American dream. So that meant a lot to me, and it was very personal. And I thought about, Jose and Maria, who in this country, as I did more research, found that, look, if you don't have a credit score, you really don't have a face. And so I thought, not only, can we figure out access to capital, but we're also really giving people a financial identity in the U.S. if we could figure out how to help them build credit. So I formed a research project when I was in business school, and that project ended up turning into a company I founded called Progreso Financiero. So my background is, 10 years ago, I had no experience in consumer banking or lending,
right.
But then I embarked on starting Progreso, and that was really what got me into this whole space. And now, as you know, I'm the CEO and founder of Insikt, but that's a bit about my background, how I got into it.
Okay, so let's just talk a little bit about Progreso Financiero before we move on. Can you just talk about how, like you said, you didn't really have any experience in consumer lending, and here you're lending to people that most financial services companies would think a highly risky population. So how did you approach that, and what did you do that others wouldn't or couldn't do?
Sure. Yeah, that you're right. That's the number one challenge we were facing. As I did research at business school, I figured out that, look, there's a data problem here. There's a lot of people in America that are part of this credit invisible where they just don't have a credit score or they don't have sufficient data in the credit bureau. And so the challenge is, it feels risky. Can you really underwrite them? Are they going to be good credits? Going into it, I felt that our community, Latino community, while they may not have formal credit history, they had what I used to call a lot was high moral collateral. So it didn't have formal collateral, but it had moral collateral. And so how could we figure out, how to draw out information about them that would prove that they would be good credits? And so when I graduated, the first thing I did was I said, okay, I need to go test that people actually need credit. There was a lot of data about the unbanked, but there wasn't really data about providing a credit product being the solution to solving the unbanked. So I told the professor, hey, I just want to set up a booth inside a Latino supermarket, flip open a laptop, put up a Progresso banner, and start taking applications and seeing if people need credit. So I did that. The first store was a small supermarket in San Jose called Supermercado Mexico. And we set up in a booth, and you can imagine Mexican music playing and lots of families coming in, lots of people, and previous ex-MBA sitting with a laptop there kind of out in front of the cash registers. And so for a few days, nobody applied. Everybody kind of looked at me like, what's this guy doing? And then over time, I had the actual teller, woman who worked at the cash register, kind of felt sorry for us. And so she said, what are you doing? And I'll apply. And once she applied, then we started having a lot more people come to us. And so what we found out very soon is we did this really long, imagine an eHarmony-like application, but for credit, for a small loan. So for like $1,000 loan. And we came up with a very simple structure. If I could explain the loan to someone who didn't have a lot of financial education, but it made dollars and cents for them, it made sense from a dollars and cents perspective for them, then that was a win. So we came up with, hey, if I lend you $1,000 and you can make a payment of $60 every 2 weeks, and you could do that for 10 months, if you can afford $60, and we'd ask people, can you afford a $60 payment? Say, yes, I can do that. Well, if you can do that, I can lend you $1,000, and after 10 months, you'll pay me back $1,200. That's 20 payments times 60, $1,200. And I would say, so if we lend you $1,000, you'll pay us back $1,200. What's your cost? And they would look at me and say, that's $200. And I'd say, you're right. So $200, that's how it works. We lend you $1,000, pay us back $1,200. It's very simple. And that was really the key to our success, is making the product extremely simple. Mm-hmm. I would then expect that had a 36% APR, and initially customers their heads would jolt a little and say, well, is it still $200? And I'd say, yeah, still $200 cost. And what we learned there was that in this market, people really cared about the dollar cost of their loan, and APRs were important, but they knew that spending, getting a price of $200 to borrow $1,000 spread over 10 months was a really good deal. Right. And I was able to break down that, look, they knew there were other forms of credit that cost them 400% or much higher cost. And they also cared that they could build a credit history. So we had a lot of people apply who said, I just want to build credit. And that's why I'm here. I don't actually have a need for $1,000 yet, but I want to build credit because I know it's important. Mm-hmm. So that's kind of how we got started. And, to answer your question about the scoring and underwriting, like I said, we asked this eHarmony questionnaire, and just because we didn't know which questions would ultimately stick and which answers that would be predictive down the road. And so we did that. I kind of led that process in the beginning, and then I knew that, one day we would have enough funding and we'd be big enough where we could hire some, ex-Capital One type folks to come in from the credit card industry and make sense of all this data and build much more of an automated, big data type, algorithms to how we underwrote. But in the beginning, it was very basic. It was all about, can you afford the loan? Do you have enough income relative to your expenses? And let me ask you, 30 minutes of questions. That really was our R&D for, what ultimately became a more robust model on how to score people.
Fascinating. That's an interesting way to get started. So, just to close the loop on that, I know Progresso rebranded to Opportune, and have they gone public yet, or are they about to go public?
I don't know. I've heard a lot of rumors. There was a Wall Street Journal article. I've heard that they are in registration, but that's all that I've heard. Okay. I don't have any other inside knowledge, but I've heard in the street that, I know the company's been successful. When I left, it was, several tens of millions of revenue, and I know it's now in the hundreds of millions. So I'm sure I'm proud of what we built. Just fast forward, you're right, I had no experience in consumer lending, but as 7 years, I was a CEO and built it up to a very large business. I think when I left, we were close to 200,000 active borrowers. We were originating like 20,000 loans a month, so we had a pretty big book of business. And very proud. We changed a lot of lives, transformed a lot of lives, and Opportunity, as it's now called, has a great heritage and history, and we were able to hire, I think, some of the best and brightest people to help us, build that early success, which, as now they've been able to scale it, even further.
Right. So let's just move on now to Insikt. You started this after Opportune. Just tell us exactly firstly, why you decided to start it, and what is Insikt exactly? What does it do?
Sure. Well, so why I started, so when I left Progresso, I thought, when I started Progresso, as I mentioned, I knew that there's this big gap in terms of opportunity and credit in America, and I specifically apply that to my community, the Latino community I grew up in, and wanted to make a difference there. But as I was building Progresso, I realized, and really after I left, that, with the onset of all the regulation in the banking community, the market just got a lot bigger. Basically, that the number of people who in this country would have a hard time getting credit from a bank just quadrupled because Dodd-Frank, the Credit Card Act, all the ensuing regulation just made it a lot harder. Whether that was mortgage, consumer credit, unsecured, personal loans, just made it a lot harder for banks and all the capital requirements to be able to lend. Specifically, if you're talking about everyday Americans, hardworking folks who may not have the best credit histories or may not have any credit history, coming out of the crisis, they were going to have a really hard time. And so I thought, hey, I really care about, helping everyone, not just, the Latino community, but expanding this to everyone, and this is just a bigger opportunity and it's a bigger need. But, how do we go about building something like that scales, a lot faster than what I had done before and with a lot less cost? How can we use more of a technology approach to the future? And that's how Insikt was born. So Insikt was born out of kind of a realization that I had. I said, because banks are going to have a hard time providing this credit and this capital, I think big brands in America are going to step forward and say, this is my customer. I care about them. I want them to have a great experience, and they have a need, and I'm going to step in and try and fill that need. And that need is, credit. And so, I believe that, hey, the transformation we're going to see is that brands are going to start being the lenders of tomorrow and not banks. And so I thought, how do we build a technology that can help, power that transformation? And really that's what Insikt's about. So at its core, Insikt we provide a white label loan origination platform. We call it lending as a service that brands can use so we can help them make loans to their customers. And then the other side of Insikt is I also think that there's millions of people in America who want to be part of, who are principled investors and want to be part of helping this problem in America. So they want to be part of getting capital out to communities who need it the most. So how can we create an investing product for them that's an everyday product and open that up for them to invest in? So those are the two sides of what we're doing at Insikt, is we're enabling brands to be the lenders of tomorrow through this lending as a service approach and technology. And we're also allowing more people in America to be able to invest in those loans made to those promising individuals that we give loans to using kind of a securitization model.
Right. Okay. So let's talk a bit about that lending as a service, because I know you're the one that really coined that term. It's been used a little bit, quite a bit this year. And there are many people, myself included, who think that this really is the way of the future, particularly when it comes to brands or even smaller banks, what have you. So can you just describe, and I know you talked a little bit about it, but just go into a little bit more detail with, if I am a major brand and I want to, maybe you could provide an example. If I'm a major brand, Why should I go to you and instead of maybe partnering with, I don't know, like a Lending Club or a Prosper and just kind of, because those companies obviously have all sorts of different partnerships. Why go through you and really have this white label solution? What advantages does it give?
Well, so number one, on the lending as a service model, I think it's powerful because companies already have customers, they have data on those customers, and they want to try and use both of those to open up credit. And so, but they want to do it in a way that keeps their brand intact and is clear that they're offering it to the customer and it's just powered by someone else. And so I think that's the first thing we do. Our program is fully white label, meaning that when the customer is meant so that there's no brand conflict, so when the customer interacts with that partner, that partner doesn't have any risk of losing that customer and knows that they're building loyalty and brand identity with that customer for all of their products, this being the new product, but that, they're really thinking about, if it's a consumer brand, lifetime value and loyalty and retention. And so we're very focused on making sure we're powering the brands that already exist, and we want them to be more successful with their existing customers. The second thing that I think makes us different is who we focus on. I think, since you mentioned them, Prosper and Lending Club, I think they're great models, very innovative companies, and they've stuck out a focus on kind of the prime, super prime segments in America, and I think they're good at what they do. We have a specialty that's really working with brands that know that their customers are harder to approve. And they know that banks have a harder time approving them, and they know that some of the leading lenders in the country will have a harder time approving them because they're customers who don't have as much credit history or, have poor credit. And so they need to find a partner that can still approve their customer, but also give them a noble product. So I think they're also quite keen on making sure that the end product the customers get is one that's empowering, that's noble, that reports credit, that meets a lot of the new standards that are being set on lending, and can make them feel like proud of what they're giving their customer. Right.
Okay. No, that makes sense. I get that. So have you? I guess firstly, when did you really launch this, or have you launched it yet? Do you have any clients as of today that are using your white label service?
We do. We haven't been as public about it, as you know, Peter, but we have 5 partners, brands that are in market. Our first partner we launched almost a year ago. We spent a lot of time building the technology because I think, just to add a third point, what makes it different is, I think, when I built a company before that was a consumer brand, and you're very focused on supporting everything around reinforcing that. When you have to build a company that's more of supporting someone else's brand and customer experience, I think the way you build the technology is very different. The way you build, your scoring, the way you build kind of the whole company. And so I think it would have been very hard to have done this, at least speaking from my prior life, in that context. And so in that regard, I think we've got something that's quite unique. To answer your question, we have 5 partners that we are currently powering. We have made, thousands of loans, thousands of credit applications have come through in a short period. We're very excited with the growth. We've been, kind of uniquely focused on making sure our partners are successful. So we spend a lot of time doing that. We probably, as you might be indicating, should spend a little bit more time talking about what we're doing and who our partners are, because we certainly want to bring in more. But right now, we kind of focused on, hey, let's build an initial platform and let's really listen to our, initial, brands and partners and make sure that we're building, software technology and the approach that works for them. And the nice thing is we always give them an a la carte menu. So we say, look, one of those things is we can be the licensed lender. We're the balance sheet. We'll fund all the loans. We're doing all the technology and processing. We'll handle all the payments. So there's like this long list of, a la carte menu that they can have. And we always tell them you can hit select all, or you can kind of go in and check off the things that you want to do. So I think, one other aspect that, makes us different is very flexible. We found some partners who actually want to have more equity or skin in the game in the program. They kind of want to make it more JV-ish, and how they structure it. And so we have the flexibility to do that as well. We have the flexibility to take things off the list if they, for example, want to fund the loans. I think one thing that makes it different, though, is that we are willing to do the balance sheet and take all the risk. And so far, when we offer that up, I don't think we found anyone who has objected, as I think most brands don't want to be in the balance sheet business.
Right. Yeah. No, that's understandable. So then who are funding the loans ultimately? I mean, who do you have a credit line? Do you have a bunch of investors you work with? Who's on the other side of this transaction?
Yes, I was on a panel yesterday with Aaron, Vermouth of Prosper, and I think he said it appropriately. Marketplace lending is really about how you fund your loans. And, are you having more than one, kind of provider? Are you trying to build a marketplace of investors? So to answer your question, we believe in that. And I think really what Prosper and Lending Club started is tremendous innovation on how you, have the law of large numbers and kind of have multiple parties funding loans, and you reduce risk by having diversification. The one thing that makes us different is instead of having investors buy whole loans or invest in fractional interest of loans from us, we think in the long run they're going to have lower volatility outcomes, losses, higher certainty of certain coupons and yields by structuring everything as securitization. So all the loans that we make, we pull them together by partner and we securitize those and then we're effectively then selling bonds and having investors buy into those bonds. And so we still want a marketplace of investors. We just think that the product they buy at the end of the day is a bond and not the underlying loan. And by pooling loans, you get more diversification. You take out, the kind of outliers, et cetera. So, and then they also get skin in the game as we're investing at the bottom in the equity of all the pools that we're being securitized. So they know that, we're aligned with their outcomes. I think, coming back into, your specific question. So when we make loans, we do use credit lines. We have over 100 million of credit lines that we've secured from various parties. And then, when we think those loans have seasoned long enough and we feel very comfortable about the direction of those loss rates, we then securitize them to a marketplace of investors.
Right. Now, I want to talk about that for a bit because this is a pretty unique thing that you're offering to the community. You go onto your website and you have your Insikt market where, right now there's a bunch of Prosper loans, or they're pools, I guess. They're not loans, pools of loans that have a certain age and a certain coupon. And right now it looks like you're only offering Prosper and Lending Club, at least publicly on your website. So I guess let's just back up. So let's just talk a little bit about what you're offering, who you're trying to target when it comes to investors. Are these individual accredited investors? Are you trying to target funds, people, particularly to start off with the Prosper and Lending Club loans that you have on your site right now?
Yeah, so the idea is to make securitization and done the right way. And so what you're seeing on our website is, I think, criticism of securitization in the last crisis is some people didn't know what they were buying. They didn't know when you look through the bond that you're buying, what are all the loans that are collateralizing that bond, and what's the quality of those loans, and how do they break out, how are they performing? So, just one thing on our website, as you mentioned, if you click on our market page, if you click on any of those debt securities and you click on those, you'll get to all of the underlying loans that are collateralizing that bond or trust certificate, and that effectively, we think, puts a lot of the practices that were done before on its head and kind of says, look, we believe in 100% transparency, trying to make this simple, but giving people loan level data. So that's really important to us. In terms of, Prosper Lending Club and who we're targeting. So we're targeting individual accredited investors, Peter. We're also, we also realize that there's a lot of funds who are also interested. So it's institutional and, getting a portion of those 9 million individual accredited investors across the country. And, the thinking there is, currently in the securitization market, you have the same 100 to 200 buyers. They're very large asset managers. insurance companies, and they always show up to buy, into all securitizations. And there's really no distribution that's been built or established to, tens of thousands of other investors in the country and globally who are sitting in a similar position saying, look, I have X percent of my assets in cash and in treasuries, and I'm earning nothing, or I'm earning close to nothing. But, I feel good about it because I've got the security of knowing, I'm not going to lose my principal really. But, is there anything else I can invest in that I care about? Two things that, I feel like the risk is mitigated. I feel like, it's short duration, so it's very short. If I have to hold this bond or, security for, to maturity, it's not going to be 30 years. It could be 1 year. And I feel comfortable doing that, taking 1 year risk, and also I'm getting compensated in a way that's significantly different from anything else in the market. We have, what you're seeing on our website is we have trust certificates that pay a fixed coupon. And so they act like bonds, and they, you're seeing coupons of 4 to 12%. And those durations are going to be between 1 year and 2 years. And so you kind of look, well, what else can I buy that is that short of duration that's giving me that kind of coupon and yield? And, you'd have a real hard time finding that. So we believe that need, coupled with the need to be principled and say, look, who are these loans ultimately going to? And am I helping America? Am I helping people move up the ladder? And if I can do that plus achieve my financial and investing objectives, this is a great new product. And so we want to open that product up to all of the accredited investors, family offices, and also some institutions across the country that currently securitization is not an everyday investing product. Mm-hmm. We want it to be. So that's our vision.
Okay. So what is the minimum if an accredited investor is listening and they want to give this a try? What is the minimum you will take?
Yeah, so historically for us, it's been 50,000. I think we may have moved that up to 100, but historically we've had 50,000 being kind of the minimum. And there's two things investors can do. They can buy these trust certificates directly, or they can. We also set up a family of funds. So we now have a family of Insikt funds that investors can invest in. Those funds, you can think of them as like index funds, and those funds will buy across all of our securitizations. We had a couple of investors tell us, look, this is great, and we understand in the future, you want to be doing a securitization a week. So that's a new issuance of bonds or trust certificates that we can buy. But, I've got a busy life, and, it's going to be hard for me to log on and want to participate, every week. Do you have kind of like an index fund that I can invest in, put more capital in, and then that fund can invest me across all of the securitizations according to specific strategies? Mm-hmm. So every securitization we do has kind of three tranches. There's a senior tranche, which is the lowest risk of the three, and then there's a junior tranche, which is the mezzanine, and then there's the final tranche, which is the equity. And we, the company, are always the equity owner. And if there's any impairment in the collateral and ultimately in the bonds, the equity would lose the money. It would lose the money first, followed by the mezzanine and the senior. So the senior and the mezzanine have more protection knowing that there's equity below them. The senior has protection knowing that there's a mezzanine and equity below them. And so those are the three, types. Those are the two securities you can buy, the senior, which we call the Class A, and the junior, which is the Class B. And we have funds that will only buy the A or only buy the B. And so far that's been a good strategy. If you want to dial up or down risk return, you can look between the A and the B and get a fixed coupon. And so our website shows all the cash flows, of all the prior bonds and how they're cash flowing every month, how they're paying interest and principal. The funds are, all the information's online. You can go and check out our funds. You can see exactly what the yields have been, how many securitizations. You can see all the master servicer reports. The goal here, again, has been a 100% transparency. Mm-hmm. How do we bring that as the norm to do securitization the right way? So that's what we've been doing. And we started with Prosper and Lending Club, and they've been great partners with us. We had some great risk people on our team. We said, hey, until our white label starts to really build, we want to build this securitization marketplace. And, in partnership with Prosper Lending Club, we've been able to selectively find loans there and then, buy those loans and securitize those loans through our platform to give investors an early proof of concept. as to the kind of opportunities they would have. And our goal is to, help investors do well now, make money on those underlying loans, be happy with the risk return and all the reporting that comes through our website. And then what we'll have coming starting probably mid next year is we'll be doing our first securitizations of our loans that we're making through our lending as a service platform.
So you said, when did you say, like middle of next year, did you say? Or when do you think?
Middle of next year, yeah. What we want to do there is we want to give those loans more time to season and just be really sure about the loss rates. We've got our own, equity invested in all of our securitizations. So we want to make sure, most important thing for us is to have a reputation for high quality assets.
Right.
We did that at Progresso. We built an incredible, risk results, an incredible story and reputation around, underwriting. And so we want to make sure that anytime anyone buys anything from us, they have a good experience. Right.
Yeah, that makes sense. So before I let you go, I want to just talk about also on your website is this My CRO product. And you've really done a lot of work here in, providing, just basically statistics, charts, information for investors. Can you just tell us a little bit about what the goal is with the CRO and what actually My CRO and what it is?
Absolutely. We're very proud of this. So when I was running Progresso Opportune, we had a whole team of analytics and risk people that every month would cut, what you would call inside the lending side, a loan tape. So all the loans that you've made, at the end of every month, you're looking at all the borrower payments, et cetera, and you're taking that data and you're producing graphs on loss curves. So you're looking at, your cumulative loss curves by vintage, so you're like, hey, how is May 2014 performing? And every month that's outstanding is an additional month on book. So you're starting to, graph, is that heading for an 8% loss rate? Is it heading for a 5% or 10? And then is June, the month after May, is that coming out lower than the 8% that May looks like it's heading to? And if so, it looks like I'm getting better, right? And so you really want a lot of good analytics at the end of every month as to how things are performing. But you need to kind of graph things in a way to then make it digestible. And so as we're seeing, there's a lot of information out there about, loans and kind of general information about loss rates, but no one has really digested it in a way where if you had your own internal risk team, you would do for internal reports. And so My CRO means My Chief Risk Officer. And so what we want that to be a brand that stands for, hey, if you had to have your own Chief Risk Officer and team, take these loan tapes and turn them into graphs and digestible information so that you can evaluate risk and loss performance, and you can understand credit and how risk is performing much easier with the click of a button. And then you can go and click through, well, actually now I want to see first payment default. So the loans that I just made last month, I want to see how many of those have missed their first payment. I want to look at 30-day delinquencies. I want to look a little bit earlier in the life of my more recent loans. Or I want to go back all the way to 2008 and see how did the loans perform during a crisis and how bad did things get. I want to go and I want to compare that across platforms. Those are the kind of tools that we wanted to enable folks to have, back to this theme of 100% transparency. So right now we've got in My CRO, and we've got some nice compliments from our partners about this, at Lending Club and Prosper, but we've sort of loaded a lot of their data. We know a lot of their data is all publicly available, and there's a lot of other sites that have kind of taken a crack at trying to present that in a way that's more meaningful. We took a crack at it from, hey, how do guys who manage risk think about this, and what do we want to see? And that's what My CRO is. So we're very proud of that, and I would encourage everybody to go take a look at that. In the future, we want people to be able to upload their own loans and use My CRO as a tool that helps them at the end of every month, keep track of performance. We think this could be a tool for the industry as well. There's a lot of investment banks who are making warehouse lines and are also doing securitizations for issuers of loans, and they have to do this process every month with a team of analysts, and we think we can be the source and the go-to source for the industry for that. So that's what My CRO is. And then My CIO, that you mentioned, is kind of the opposite of that, which is My Chief Investment Officer. And that's meant to keep track of if you bought the bonds, because the loans are covered in MyCRO. How are the underlying loans performing? Including in MyCRO, you can see all of our securitizations, and you can track, okay, if we said this securitization was going to have what we think was an 8% forecasted loss rate, after 36 months on a cumulative loss basis, are we on track? So you can also plot MyCRO, the actual versus forecast, in a graphical way, in a way that makes it really easy. If you bought the bonds and you just look at that graph and the actual is like right on track with the forecast, then you don't have any reason to worry about any impairment in your bond, and you can go on about your day. And so MyCIO takes that and says, okay, now let's look at these bonds and let's look at what they're yielding. And let's also do a red light, green light display to say, okay, if there's a problem in the underlying loans, I'm going to see a red light. If it's yellow, it's somewhere in the middle. If it's green, I don't even need to worry about it. And so MyCIO kind of looks more at the cash flows of the bonds. It looks at the yields, the returns, has all the master servicer reports. So MyCIO is more of, if you're an investor in our funds or any of these securitizations, you're going to start with MyCIO, and there's a great dashboard there. But then if you ultimately want to look through and get down to the details of how the underlying loans are performing, then you go to MyCRO.
Okay, well, that's fascinating. I'd love to delve into this a lot more, but we're pretty much out of time. Just one final question, before I let you go, and just you've got a lot on your plate here. It's pretty clear that you're really doing a lot of innovative stuff. So I guess what I'm curious about is, where do you think your company is going when it comes to is lending as a service? Is this something that we will see in 5 or 10 years' time? Will this just be all the major brands are doing it, everything's doing it? I know you're obviously you're very bullish about it. You've spent a lot of time doing it, but I'm just curious to know what you think. Do you see this as a niche play that is really going to have a decent market, but it's not going to transform? Or do you really think that Insikt can be a multi-billion-dollar company that's really a huge part of the lending landscape, and lending as a service is going to be something that everybody does?
Well, Peter, I think this is going to be massive. First of all, I think because of all the change in regulation, let's start with non-bank lenders are going to rule the day, because it's going to be harder for banks to provide capital. So I think the whole surge in alternative lending, I think there'll be some winners and losers, but that the overall the space is just going to continue to grow. As part of that, lending as a service, I think, is the future, because there's everyone's fighting for channels of acquisition of customer. Cost of acquisition is probably going up across the industry because of all the new entrants, and lending as a service is a way of powering someone else to get in front of that customer who already has a relationship, already has the data, and they want to be part of the solution. And we're seeing that. We're being approached by a lot of companies who say, that's what we want. We just don't want to be in the balance sheet business. We want to outsource these parts to you, but we want to be able to be part of this solution. And I think that is the next wave. So can that be billions of dollars plus? Absolutely. We're trying to, our goal is we want to have access to thousands and thousands of locations across the company and millions of customers through our partners, really focused on the segments I mentioned earlier. And, a question I always get too is, well, where do the banks play out in all of this? And frankly, we think the banks can be part of lending as a service as well. And, one thing we've just announced that we're very proud of is we partnered up with BBVA Compass Bank. BBVA made an investment in our company, and we partnered up with the bank that they have in the United States called Compass Bank, which has been very successful, has almost 700 branches. And we've announced that we're doing a partnership with them where we're live in several of their branches. They're using our platform. Their bankers in their stores are using our platform to make loans to their customers and give them very responsible small dollar loans. That, I think, gives you a signal as to what the future is going to be about. Not only will there be brands partnering with, lending as a service models like Insikt, and I think, you've seen, Cabbage, and I think you've seen a few others announce, kind of some white label partnerships. But, I think also banks are going to be doing the same thing, and banks are going to be partnering with innovators to make sure they're serving all customers. And we're very proud to be powering that transformation. And, when we get into thousands of locations and we're, powering lending across the landscape, where customers are touching us at different points, and, they find out that, we're powering all of that lending, I think that's absolutely multi-billion and, something that, we named our company Insikt. I'm not Swedish. It's a Swedish word. My wife is a Swedish one, and but it means insight. And that is because as we have all these locations and distribution and partnerships, we're getting tremendous insights on the credit data that we can use to power more and more partnerships. And so that's the network effect, and I think that's multi-billion.
Okay, well, it's a fascinating idea. You've got a great company there, James. I very much appreciate you coming on the show. Thank
you, Peter. We appreciate it as well, and I look forward to working with you in the future.
Okay, thanks, James. See ya. Well, I know we've gone over time, but I certainly didn't want to cut James off there at all. That was a fascinating conversation. And I think they're doing so many interesting things in so many fronts. The lending as a service piece is very compelling. And on the investor side, what they're doing things that no one's ever done. No one's created these sort of bond-like instruments that is available just for accredited investors. You can choose your coupon, you can choose your duration, and away you go. That's different. There's certainly a company to watch. I'm glad we were able to get James on the show. We've been trying to get him on the show now for almost a year, but certainly I think lived up to my expectations, and hope you learned a great deal. On that note, I will sign off. Thank you very much for listening, and we will catch you next time. Bye.